Hi everybody, this is Lara with your end of the week analysis for gold for the trading week ending Friday 16th of October 2020. The situation for gold just isn't very clear at the moment, and so I do still have two Elliott Wave counts, and I have an alternate for the first as well. I still have the big picture bull and big picture bear counts, but they're both expecting more upward movement, but I'm going to consider the possibility that there is a major sustained high in place for gold. Let's go through the analysis and then get to classic analysis last. At the weekly chart level, this bigger picture wave count is bearish. When supercycle B is complete, it would expect a huge big C wave to move below the end of A, but we're not there yet. Supercycle B looks like it may be incomplete as a double zigzag. Here's the first zigzag in the double. It's labelled cycle W. Double is joined by a 3 in the opposite direction labelled X, and here's cycle wave Y, a zigzag A, B, C. The question now is whether C needs a fifth wave up, or could it have been over there, and I'm going to consider both possibilities, and this is the price point which will tell us which of those two scenarios is correct. Because if C is incomplete, then a fourth wave correction within primary wave C may not move into primary wave 1 price territory. That's why a new low below this point invalidates this wave count at the weekly chart level and adds confidence to a more bearish wave count. But we should always assume that the trend remains the same until proven otherwise, and very obviously this is an upward trend for gold, so we should assume that this is a counter trend movement until proven otherwise, and this is what I mean by proven otherwise, invalidation of this bullish wave count. Let's take a look at the daily chart now, where the low for primary B is this point down here. Now we're looking at more detail for primary C with intermediate 1, 2, 3, 4 and 5 may be underway in its early stages. It's really taking its time beginning. Intermediate 4 here subdivides nicely as a zigzag A, B, C with a triangle for B. If it continues further as a double zigzag or double combination, which it could, it can't move into wave 1 price territory, but considering the duration, it really should be over here. Draw an Elliott channel around primary C with the first trend line from 2 to 4, place a copy on the end of 3. Along the way up, so far corrections are finding support at the lower edge of that channel. While price remains above this really important black trend line, assume the trend remains up. If we see a full daily candlestick below and not touching this trend line, then I will be using my more bearish alternate wave count. The target for intermediate 5 remains the same. The most common Fibonacci ratio for a fifth wave to exhibit is that of equality in length with its counterpart, first wave. At the hourly chart level, here's the end of minute 2, which you can see on the daily chart, and the start of a third wave at 1, 2, 3, 4 degrees may be here. This wave count expects an imminent upward breakout, which really should come next week now, as a third wave at multiple degrees should exhibit strength. At the daily chart level, this wave count is identical to that first wave count up to this low here, and now I'm seeing the end of primary wave C differently. Here I've got a brief, shallow fourth wave counterpart to a more time-consuming second wave. This is a really normal look for gold. It does tend to exhibit strong fifth waves, which force the fourth wave that comes just before it to be more brief and shallow, and over the years I've learned to keep an eye out for this typical curved look for gold's impulses. But we should always assume that the trend remains the same until proven otherwise. And when we look at this trend at the weekly chart time frame, it does look like gold should remain in an upward trend until proven otherwise, and this is the price point which would prove otherwise. This wave count requires a new low below this price point in order to have confidence in it. If there has been a trend change here, then this may be a first wave down, and it did begin with strength, so that would tend to support this view as a possibility to be aware of. A second wave correction may have begun here. It could continue as an expanded flat, A, B, C, C needs to subdivide as a 5-wave structure, 1, 2, 3, 4, 5, and the third wave needs to be an impulse. If we see a breach of this little channel, though, then the probability of this wave count would reduce. At the hourly chart level, the idea is the same as the other hourly chart. A third wave up at 1, 2, 3, 4 degrees at least should be in its early stages. We should see upward movement with support from volume and increasing momentum next week if one of these bullish, or at least short-term bullish wave counts is correct. This wave count is identical to that last chart up to this high and this low, but now instead of intermediate 2 continuing further as an expanded flat, what if it was over here? What if in the new downward trend there's a series of 1, 2, 3 overlapping first and second waves? This wave count expects an imminent downward breakout, which should come early next week now. If we see a full daily candlestick below this small Elliott channel that contains this little zigzag for minute 2, a full candlestick below and not touching the lower edge of the channel would constitute a proper breach, then consider this wave count very seriously. We would still need price to confirm it for us with a new low below this price point. And because the Elliott Wave rule used to determine this invalidation or confidence point, it's a confidence point for this count and it's an invalidation point for my prior daily charts, the Elliott Wave rule used is absolute. And so what that means is a new price point by a fraction of a cent on a tick chart is enough to invalidate the bullish counts and add confidence to this more bearish count. We don't need to see a close, we don't need to see it on a daily chart level, any amount at any time frame. Minute 2 may not move beyond the start of 1. I will invalidate this wave count or this labelling if we see a new high above this price point. Again, any amount at any time frame. That's one of the nicer things about Elliott Wave. Those rules, all of them bar one, are absolute. At the weekly chart level, and at the monthly chart level, this wave count is different. It sees the bear market for gold complete down here. It will subdivide nicely as a double zigzag, and it's a grand supercycle degree 4th wave I'm seeing over here, and a new bull market, a grand supercycle degree 5th wave beginning here. So far, a cycle degree 1st wave impulse could be complete here, a cycle degree double flat could be complete here for a 2nd wave, and now a 3rd wave unfolding, subdividing at primary degree 1, 2, 3, 4, 5. This is the simplest 5-step forward pattern. Elliott Wave is fractal. Within the 5th wave, which is extending, again, the simplest Elliott Wave structure, 1, 2, 3, 4, 5 is expected to continue. This wave count is very bullish. It expects the bull market for gold is continuing with pullbacks and corrections along the way, which is absolutely normal. Price will not move in a straight line. If it did, we would all probably be a lot more wealthy than we are. For the short term, minor wave 4 may not move into minor wave 1 price territory below this invalidation point. For this wave count, if this invalidation point is breached, then I would probably see cycle wave 3 over here. It depends how we see the subdivisions in here, but it's possible to see cycle 3 over here, and then cycle 4 would be unfolding. And here is the invalidation point for that idea, all the way back down here at the high of cycle degree wave 1. Let's take a look at this at the daily chart level with the end of intermediate wave 2 within this extending 5th wave for primary wave 5, and it's really normal for gold to have extended 5th waves within a 3rd wave impulse 1 degree higher, so this part of the wave count follows a really common behaviour for this market. It's the end of 2, 3, an incomplete impulse, and then 4 and 5 would need to unfold. Now the impulse for 3, the simplest Elliott Wave structure, 5 steps forward, 1, 2, 3, 4, 5. Minor wave 5 has to subdivide as most likely an impulse, 1, 2, 3, 4, 5. And the target for minor 5 is for it to reach equality in length with minor 1. Again, that's the most common Fibonacci ratio for a fifth wave to exhibit. At the hourly chart level, the hourly charts are almost all pretty much the same. It's just the degree of labelling which is different. The target is the same, the invalidation point is the same, the base channel is the same. Use this trend line. If we start to see strong downward red candlesticks below this trend line, then consider that more bearish possibility. It would increase in probability. At the weekly chart level, price has hit resistance this week. It's done so with lighter volume. On balance, volume is also in a small, narrow range with increasing technical significance the longer it remains within that range. We don't have a breakout from price. It's essentially still consolidating after breaking out down from this triangle. This is a deep back test which reduces the performance expectations of that triangle. ADX is declining at this time frame. There was no clear trend after the upward trend. This previous upward trend reached very extreme. Now here's another reason why I am publishing a more bearish Elliott Wave count at this time. At this high we have a shooting star candlestick, that's a bearish candlestick reversal pattern, and a strong bearish engulfing candlestick pattern, that's the strongest bearish candlestick reversal pattern, and that one has support from volume at the weekly chart level. And that occurred after RSI reached overbought and then exhibited clear and strong double bearish divergence with price. In those circumstances, we take those bearish candlestick pattern warnings very seriously. This pullback has been enough to bring RSI well back into neutral territory though. There is again room for price to rise, and it certainly could make another high and exhibit triple bearish divergence. But it's also possible there has been a full 180-degree trend change and a new downward trend could be developing from here. For that idea, we really would like to see a lower low, and either one of these two swing lows at the weekly chart level would suffice. If we were to see a new low below this point, we'd have to take that extremely seriously. That would probably not just be a pullback within an ongoing upward trend, that could be a new low within a new downward trend, but we are not there yet. That has not happened. Okay, I've been over pretty much all of that chart. Let's take a look at the daily chart level. We had what looked like a somewhat reasonable symmetrical triangle here. I calculated a target for it, but it wasn't met. And now we've got this deep bounce here, coming up to find resistance a little bit below the lower edge of that triangle. And now it looks like we might have a flag pattern unfolding. So I've calculated a target from the length of this flagpole to the breakout point. The target would be at 1754. We need to see a downward breakout from this flag pattern though before we can use that target. A downward breakout does not require support from volume, but if we see it, then it's more impressive. Flag patterns are continuation patterns and they have a fairly good reliability. However, the most or the best performing flags and pennants, which are quite similar, happen or complete within 15 up to 15 sessions, and this one has now lasted a total 15 sessions. And so if we do not see a breakout downward from this pattern on Monday, then the possible performance of this pattern will reduce. If we do see a breakout on Monday, then use that target calculated from the flag pattern at 1754 and expect downward movement to continue. Along the way, look out for support about 1800. It's quite normal while flags and pennants unfold to see volume decline. On balance, volume is also tightly constrained with an increasing technical significance of support and resistance here. If on balance volume breaks out prior to price, that would provide a signal. If on balance volume breaks out with price, that will provide confirmation. RSI is in neutral territory after being strongly or deeply overbought at the last major high. There's plenty of room for upward movement to continue again or for downward movement to continue. ADX at the daily chart level also indicates no clear trend. ATR is declining as price moves sideways. indicating that this may well be a counter-trend movement, which is what the flag pattern tells us, and that would tend to support that more bearish Elliott wave count. That's all from me this week with your gold analysis. I hope that all of our members are having a most fabulous weekend.